Hello YouTube, welcome to Accounting 101 with T. It's been a long time since I've recorded a video. Please don't forget to click that subscribe button. If you are new to the channel, click that subscribe button. Don't forget to like, share and comment so that others can get the video. We are going to be doing the National Senior Certificate Examinations question paper, which is the accounting paper 1 from the 2023 May-June question papers. We are going to be doing the question 1, which is the statement of comprehensive income and current assets, which is the 60 marks, 45 minutes. We are going to skip the 1.1, go straight to 1.2. Starlight Ltd. The information relates to the financial year ended 28 February 2023. The company trades in electrical items. Required 1.2.1. We are required to calculate the value of closing stock of the light bulbs on 28 February 2023 using the weighted average method. We are referred to information B I. So now going to the information BI, a physical stock count adjustment and additional information. A physical stock count on 28 February 2023 revealed 2,774,800 stock was on hand. However, this figure excludes the closing stock figure for light bulbs. Note that the weighted average method is used to value the light bulbs. So now we are going to use the weighted average method to calculate the value of closing stock. This is our details of the light bulbs as follows. So the stock on the beginning of the year, the value of stock at the beginning of the year was 416,000, and then the purchases was 3,478,000, and then we are required to calculate how much or what was the value of stock at the end of the year using the weighted average method. As you can see here, this 2,774,000 does not include the value of closing stock, meaning that after calculating this amount, the value of stock, we are supposed to add it back. We are supposed to add it on to the 2,774,000 to know how much is the value of stock that we have at the end of the year. I hope we are clear on that one. Without any further ado, let me get on to it. So we are going to be using our Excel spreadsheet as our answer sheet. As you can see, the answer sheet is provided here. We are going to be doing our 1.2.1. So we are required to calculate the value of closing stock. We are going to take the value of the closing stock at the beginning of the year, which is 416,000. It's going to be 416,000. Let me put it in brackets. 416,000 plus the purchases, the value of purchases is 3,478,000. The value of purchases is 3,478,000 plus the carriage on purchases, which is 27,500 plus the carriage on purchases, which is the 27,500. I hope we are together with that one. 27,500. Also put in brackets, divide. Let me explain this quick before I move forward. This 3 million, let me go to the question paper. This 3,894,000 and this 55,000, we are not going to take it. This is the total of these two and these two, so it's 8,000 plus 47,000, which is equals to 55,000. 4,416,000 plus 3,478,000, which is equals to this. Just this plus this equal to this plus this equal to this. I hope you are clear on that one. So now, because we are doing weighted average method, when you are doing your weighted average method. It's the value of the value of the stock divided by the units of the stock. So now we are going to take the units of the stock that we have for the light bulbs, which is the 8,000 at the beginning of the year, 8,000 units. Going to record it as it is 8,000 units plus the 47,000. Yes, plus the 47,000 for the purchases. So it's going to be 47,000, also closed in brackets. So we are going to say in brackets, we are going to say equals to, in brackets, 416,000 plus 347,800. Is it 3,478,000 plus 27,500, close brackets, divide, open brackets, 8,000 plus 47,000, which is going to give us the amount of rands that we should use to times the units. So it's going to be 71.3 cents, 71 rands, 3 cents. So now to get our final answer, we are going to say we are going to take the units at the end of the year, which is the 1,700 units, 1,700 units times the 71 rands, 3 cents that we got. So we're going to say 1,700 times 71,3 71.3 cents times 71.3 cents. Now we are getting 121,200 rands. This is the, let me put it in bold, we are getting the 121,210. This is the amount of the closing, this is the value of the closing stock of the light bulbs on the 28th of February 2023. So now this amount, we are going to add it together with this one, the 2,774,800, and then we are going to record it on our current assets section. Going to say inventories in brackets, so in brackets we are going to take the 2,774,800, 2,774,774,800 plus this amount of money that we got here, which is 121,210, 121,210, 121,210. That's it right there. So our final answer is going to be 2,774,800, 2,774,800 plus 121,210, which is then going to give us the 2,800,000, which is going to give us the 2,896,010 rands. Let me increase this. 2,896,010. Carrying on with our activity, we are going to do 1.2.2. On the 1.2.2, we are required to calculate the profit or loss on disposal of vehicle. So now, calculating the profit or loss of the sold vehicle, we are going to look at our information, which is information II. Fixed assets and depreciation. Vehicle. An old vehicle was sold for 91,500. This is our selling price. 91,500 on 31 November 2022. The amount received was recorded, but no further entries were made. Details of the vehicle sold. The carrying value on 1 March 2022 was 104,000. Then the depreciation per annum on the depreciation is 20% per annum on the diminishing balance method. It's 20% on the diminishing balance method. So here's what we are going to do. We are going to calculate how much was the depreciation of this vehicle. This is this vehicle that was sold. So we are going to count first how much did it spend this year. So we are going to start from the beginning of the year, which is going to be March, April, May, June, July, August, September, October, November. Because it was sold on the 30th of November, we are going to count November. So it's going to be 9 months, meaning that it only spent 9 months this current year. It's only spent 9 months this current year. So we are going to say 9 months. So we are going to take this 104. Let's go to the calculation. So we are going to first say 104. Then we increase this 1, 2, 3, 4. 104, 104,000 times the 20% times 20% times 20% times 9 over 12. Why am I saying 9 over 12? It spent only 9 months, so from 1 March up until 30th of November, it's 9 months. So 1 March, April, May, June, July, August, September, October, November. So it's 9 months all in all. So it only spent 9 months in the business. So now we are going to say check how much was it. So we're going to say equals to 104, 123 times 20% times 20% times 9 over 12, 9 over 12, which is giving us so now we are going to say 104 100 times the 20% times the 20% times 9 over 12, 9 over 12, which is the 9 months over 12. So now what are we doing? We are calculating the depreciation. So now let me be specific here. Depreciation of this vehicle. Depreciation of this vehicle going to be 15,600. Depreciation of the vehicle is 15,600. So now we are going to have the selling price. So our selling price we were given it was a given amount. Our selling price it's where is it? 91,000. Not the okay. Yes, it was 91,500. Our selling price is 91,500. So we're going to say 91,500. 91,500. And then our cost price, which is the carrying value. Our cost price or carrying value is equals to 104,000. This is the cost price. So now how are we supposed to calculate the value of the profit or loss on disposal of fixed assets? Because we can see this and this are lesser amounts, so we're going to say the cost price minus the 15,600, which is the depreciation, minus the selling price, which is this, okay, minus the 91,500, which is the selling price, so we are going to say 104,000, which is the cost price or the carrying value, minus the depreciation of the vehicle, which is the 15,600, minus again the 91,500, which is the selling price of the vehicle. So we are going to calculate on the side here. We're going to say 104,123 minus, okay, because this is going to be our final answer, just say here equal sign 104,123 minus 15,600 minus 91,500, which is then should give us 3,100. So now this 3,100, the 3,100 should be a profit on sale. It's going to be the profit on sale of an asset, even though it's a negative. Let me enlarge this. So why am I saying this? This is recorded on the credit side. Both of these amounts, it's 15,600, 91,500. So 15,600 plus 91,500 roughly, so I think it's 107,000. So 107,000 comparing to this amount is less compared to both of these amounts added together. So taking the credit side to the debit side, minusing it with the 104,000 is going to give you 3,100. So now this is profit on sale of an asset. Rather, let's do this. We're going to say 15,600 plus 91,500 minus the 104 3,100 as it is. So now this is the profit on sale of an asset. This amount is going to be recorded on our income statement. Under the other income. So we're going to say profit on sale of vehicle. Profit on sale of vehicle. Let me increase. Profit on sale of vehicle. So it's going to be 3,100 as calculated below. 3,100. I hope we are together on that one. 3,100. And then moving forward, let me put it on the left hand. Moving forward, we are, let me see, we are required to do what? Okay. So next question, we are required to calculate the total depreciation for the year. So for the vehicles, we had already calculated the depreciation for the vehicle that was sold, which was 15,600. So now 15,600, then going to look for the depreciation on the remaining vehicles. What was 145,200. So what are we going to say? We are going to say 145,000. 145,000 is it 145,000? Let me double check it. 145,200 145,200 for the vehicle. This is the depreciation on the remaining vehicles. It's 145,200 145,200 145,200. Going to add it together with the depreciation that we calculated here for the vehicle that was being sold, which is the 15,600. Are we together? 15,600, which is supposed to give us, I think, let me calculate it on the side here, 145,200 plus 15,600, is it? Yes, which is going to give us 160,800. So we're going to say equals to sign 160,800. 160,800. This is the depreciation for the vehicle. Now we have to calculate the depreciation for the equipment. Let's go to our information and get information with that. Okay, equipment is depreciated at 15% per annum on cost. New equipment was bought on 31 July 2022. So this new equipment, how long did it spend this current year? So we are going to start on August, because it was bought on 31 July. We are going to start on August. So we're going to say August, September, October, November, December, January, February, which is going to be 7 months. August, September, October, November, December, January, February, yes, which is going to be 7 months. So we are going to go to our information. Our trial balance on 28 February. At the beginning of the year, our equipment was valued at 774,000. And then at the end of the year, it was valued at 822,000. This simply shows that there was an increase on the value of our equipment. So we are going to say 774,000 minus the 822,000 rands. 774,000 rands. Let me do it on the side also. 774,000 minus 822,000, if I can recall correctly. 822,000 rands. 800, yes, it's 822,000 rands. She's going to give us 48,000. Yes, 48,000. So we are going to calculate we are going to use this 48,000. We are going to use this 48,000 to calculate how much was the depreciation for the new equipment. 48,000 times the 15%. Is it the 15%? Let me look at it correctly. Times the 15% times 15%. 15%, is it? Yes, 15% per annum on cost. So now it's 15%. So I said this equipment spent only 7 months in this current financial year. So we are going to say 7 over 12, which is then going to give us let's see, okay, times 15%. Let me put it, okay, this is what I forgot to put here. That's it. It's 4,200. We are getting 4,200. This is the depreciation for the new equipment. So depreciation for the new equipment, we're going to say 4,200. It's 4,200. So for the old equipment, which is the balance at the beginning of the year, for the old equipment, which is the balance at the beginning of the year, it's 774,000. So we're going to say 774,000 774,000, 774,000 rands times the 15%, because now this is the old equipment lasted 12 months of the year. You're going to say times 12 over 12. Even if you don't do this, you won't get a different answer. You're going to get the same answer, because 12 divided by 12 is equals to 1. Same, yeah. So now we're going to say 774,000 times 15%. 15%. Let me fix this very quickly. Times 15%. Times 15%. Times 15% is going to give us 116,100. So this is the depreciation for the old equipment, and then this is the depreciation for the new equipment. I hope we are together on that one. This is the depreciation of the new equipment, old equipment. So now we are going to add it all. It's going to be 116,100. So our final answer, we have, okay, now we have to add these together. So now we are going to say the 4,200 plus the 116, which is going to give us 120,300 rands. 120,300 rands. 120,300 rands. 120,300 rands. So our final answer, we have to add these two together. So we're going to say 160,800 plus the 120,300, which is then going to give us 281,100. 281,100. I hope we're together on that one. 281,100. This is our final answer. So now this is the total depreciation for the year ended 2023 February. So this depreciation, we have to go record it on our income statement. How much was it? Let me go. It's 281,100. 281,100. 281,100. This is going to be our depreciation for the year ended 2023 February. I hope we are together on that one. Moving forward, we are going to we have already dealt with 1.2.1 and 1.2.2. So now we are required to complete the following: a statement of comprehensive income for the year ended 2023 February 28th. So now we are going to be doing the income statement of the Starlight Ltd, if I'm not mistaken. As you can see, our sales is already recorded. Also the cost of sales is already recorded. You also have the cost gross profit. So now what we are required to do is the other income. So we are going to look at the rent income. We are going to look at the rent income. On our information, we are going to refer to information B. Okay, because we are already done with this information. We are looking for the rent. So now this is the information for rent. Received 9,000 from, this is not for rent. Here's for rent. Rent income includes the rent for March 2023 received from the tenant. The monthly rent was increased by 1,170 on 1 January 2023. The monthly rent was increased by 1,170 on 1 January 2023. So now, please follow me step by step on this one, on the rent part. Follow me step by step write this down. So now, as this the rent was increased by 1,170 from 1 January. So we are going to say January, February, March. Why are we counting March? Because the rent income includes rent for March 2023, so it's going to be 3 months. So the increase is only for the 3 months on our rent income for this current financial. So we're going to say January, February, March. So it's going to be 3 months. So I want to calculate how much was the total increase for the current financial. So we're going to say 1,170 times 3, which is January, February, March. So times 3 is going to give us 3,510. 3,510. So now this is the increase. This is the increase amount. This is the increase amount. So moving forward. So now, what are we going to do? We are going to take the rent income. Where's the rent income? Rent income. Oh boy. Rent income. Our rent income is 89,700. 89,700. 89,700. 89,700. So this is the rent income that we have. What we want to do is that we want to calculate how much was the rent without the increase, without this increase. So this rent income for the 13 months, it includes the increase. So now, for us to calculate how much was the rent per month without how much was the rent per month, we have to first subtract the increase amount. So now, which is for the 3 months. So now we're going to say 89,700 minus the increase amount, which is the 3,510, 510, which is the 3,510. It's giving us 86,190. 86,190. So this 86,190, it's the amount without the increase. Without the increase. I hope we are together on that one. This is the amount of rent without the increase. So I'm going to say here rent income with increase. Are we together? Let me fix this with increase. So this is the rent income without the increase. So it's 86,190. 86,190. So now we want to know how much was the rent per month. So this is not going to stop us from calculating how much was the rent per month. So now we're going to say 86,190 divided by 13 months. Why am I saying 13 months? Because let me go to this adjustment. Why am I saying 13 months? Because the rent income includes rent for March 2023. It exceeds our 12 months period. So now it's going to be 13 months. Yes, it's going to be 13 months. So we are going to say divide by 13. It's 886,190 divided by 13, which is giving us 6,630. So now this is the rent. This is the amount of money that was paid to us per month before the increase. I hope we're together. This was the amount of rent that was paid to us before the increase. So from March 2022, 6,630 was paid to us without the increase. Without the increase. So it's 6,630 from March, April, May, June, July, August, September, October, November, December. And then from January, there was an increase of 1,170. From January, there was an increase of 1,170. So we're going to say 6,630 plus 1,000 170. Yes, it's going to be 1170, which is going to give us 7800. So it means that from January up until March, which is the month exceeding our current financial period, we were paid 7800. So it's going to be January, February, March, the 7800. Now what do we want to do? So in brackets on our income statement, we are going to say 89,700. This is the amount that we have on our trial balance, minus the 7,800 for 1 month, which is for March. We are minusing it because it exceeds our current financial year. So now this is prepaid income. In other words, it's income received in advance. This is income received in advance. This income, we are recording it. We are supposed to record it on our balance sheet section, which is the current liabilities, as income received in advance on our trade and other payables. So now we are going to subtract it on our rent income, which is the 89,700 minus then 7,800. I hope we're together on that one. So we're going to say 89,700. I mean to say 89,700 minus the 7,800. Minus 7,800 is going to give us 81,900. 81,900. So as per our information, I think we don't have any other income. We're not going to have provision for bad debts because it's increased to 25,000, so it's going to be on our expenses. And then for our inventory, which is the stock, we are not going to have it as a surplus. It's going to be a deficit. It's going to be a deficit. It's going to be a deficit. So what are we going to do? We are going to close off the other income section. So we're going to say equals to sign 85,000 plus 81,900 plus 3,100, which is giving us 170,900. 170,900. Are we together on that one? I hope we are together on that one. I'm going to cut the video here, and then I'm going to carry on with the operating expenses and the rest of the question paper. And the rest of the question on the other video. So please click the like, share button, and don't forget to comment. Also, if you are new to the channel, please subscribe. Please click that subscribe button